The Evergrande liquidity crisis refers to the ongoing financial situation of Chinese property developer Evergrande Group, after a letter circulated online of the company informing the Guangdong government that it was at risk of a cash crunch. Shares in the company have plunged in value, with impacts on global markets and a significant slowdown in foreign investment in China during August and September of 2021. Thousands of retail investors, as well as banks, suppliers, and foreign investors are owed money by the company. As of the 21st of September, the developer has 2 trillion RMB in liabilities. Evergrande's land reserves alone are large enough to house 10 million people. However, Evergrande had pursued an aggressive expansion over the last years, including ventures in electric vehicles, theme parks, energy, and many other sectors. These leveraged investments included Ocean Flower Island, a 100 billion RMB project to build an artificial island in the South China Sea. Plans to spend over 45 billion RMB between 2019 and 2021 in electric vehicle development. And ownership of Guangzhou FC, China's richest football club. On the 21st of September 2021, Financial Times reported that Evergrande used retail financial investments to plug funding gaps. In this scheme, the company raised billions of dollars through wealth management products, using that money to make up for lacks of funding in the company and repay other wealth product investors. The products were highly risky, with an anonymous executive suggesting they were too risky for retail investors and should not have been offered to them. However, they were marketed widely, with Evergrande managers pressuring subordinates to purchase products advertised at over 10% annual returns. In total, the remaining WMP liabilities stand at 40 billion RMB. Referred to as a type of supply chain finance, investors would invest money in shell companies they falsely believed to exist to supplement their working capital. As sales in the products fell, the business model of the products became unsustainable. An Evergrande executive is quoted as saying, "Many people might be arrested for financial fraud if investors don't get paid off. Our products were not for everyone. But our grassroots salespeople didn't consider this when making their sales pitches, and they targeted everyone in order to meet their own sales targets." Other Chinese companies have also sold wealth management products, including Boneng, Country Garden, Sunac, and Kaiser. In an effort to rein in the highly indebted sector, the Chinese government enacted a 3 red lines rule to regulate the leverage taken on by property developers, limiting their borrowing based on their performance in debt to cash, debt to equity, and debt to assets metrics. Evergrande is considered by analysts to be too big to fail, and a Lehman Brothers-style collapse would have massive consequences on the Chinese economy and the world at large. The new regulations greatly affected the property developer, which had historically leveraged itself heavily. So while the company's stock price had outpaced the Hang Seng Index 30% growth rate between its 2009 IPO and 2017, by multiplied its stock price 8-fold. It had also become the world's most indebted property group. The Financial Times cited the director of S&P Global Ratings as stating that the developer was so highly leveraged, it's likely to breach all of the alleged thresholds. The company announced in March 2021 that it was looking to cut its debt load by 150 billion RMB. Nonetheless, Evergrande was still expanding, having launched 63 new projects in the first half of 2021. Other central and local government regulations, including mortgage lending limits, rent caps in big cities, and land auction cancellations, precipitated a slowdown in the property sector, as authorities attempt to control rising house prices. A letter circulated online on the last week of August 2021, where Evergrande informed the government of Guangdong province that they were close to running out of cash. The company alleges the letter has been fabricated and is pure defamation, and followed its circulation by a number of public announcements to reduce fears from investors and the public. On the 22nd of June 2021, Fitch downgraded Evergrande from B+ to B. and further downgraded it to CCC+ on the 28th of July. According to the company, the initial downgrade reflected ongoing pressure for Evergrande to downsize its business and reduce total debt, with the latter action being due to Evergrande's diminishing margin of safety in preserving liquidity. On the 3rd of August 2021, Moody's downgraded Evergrande's rating from B2 to Caa1. On the 5th of August, S&P Global Ratings downgraded Evergrande and its subsidiaries from B- to CCC. 2 steps on its scale, qualifying it as having extremely speculative creditworthiness. On the 7th of September, Fitch downgraded Evergrande further to CC from CCC+. In a statement on the 31st of August 2021, Evergrande warned